Microsoft stunned the market today with a big announcement of a $26 billion deal to acquire LinkedIn to kick off the trading week. We've seen a lot of action in the markets, particularly in the social media sector, off of this development. First, I'll just bring up and show the chart of LinkedIn, and we can see here with that Microsoft really did pay up. They paid almost a 50% premium to Friday's close. And look at this. Back at the beginning of the year, the stock had been trading in and around 190 to about 210, and then there was this huge gap down. Microsoft filled in this whole gap here, paying up at about their bid was about 196. The stock's been trading about 192. Trading just below the bid price like this is a normal discount looking ahead into when people think the deal might close a few months down the road. Because it's trading just below the bid price, it's clear nobody's expecting another bidder to come in. And but we've also seen that action on a number of other stocks. So next I'm going to just show Microsoft here. Microsoft initially fell on this news, dipped below 50, tested this 48, 49 support area, and has kind of settled in around the $50 level. We are seeing momentum accelerate to the downside here with the RSI falling under 50. What is that telling us? There's a little bit of concern out there with Microsoft. There's no other bidders, but people are wondering why did Microsoft make this deal? Why are they paying so much for LinkedIn? Did they overpay for LinkedIn? And of course, what could the integration mean for their business? So there's a few risks surrounding Microsoft, but overall the declines have been fairly moderate. It's within the trading range that's prevailed over the last month. So overall, I'd say a neutral response to Microsoft for this on this deal. We're seeing a bit of a pickup in Twitter. Twitter is, of course, one of the more troubled social media companies out there. Its name has been bandied about as a potential acquisition target, and we are seeing the stock trade up. But to be honest, Twitter really hasn't gone up very much. It's popped up here from about $14, got up as high as about didn't even get through its 50-day average here near 15.50, kind of slipped back and settling out around $15. So we haven't seen a huge push of speculation yet into Twitter. It didn't get very far, and we've still got this huge gap here between $15.50 and about $17 that would need to be filled, and so far it hasn't even attempted to fill in this gap, despite the potential push of speculation on more takeovers in the social media space. So far nothing yet with Twitter, but keep an eye out though. If it starts to break this $15.50, this moving average, and start to fill in this gap, would suggest growing speculation that this could be taken over as well. Finally, I just wanted to show Facebook. Here, Facebook is actually rolling over and starting to break down. It gapped down through its 50-day moving average here. It's continued to trend low through the day. RSI accelerating to the downside. I think what we're seeing with Facebook here is Facebook is not an acquisition target. It's way too big for somebody to try and buy and swallow. I think what we're seeing here is a bit of an opportunity cost that LinkedIn is no longer available for Facebook to acquire. So they either see Microsoft as a potentially greater competitor or a missed opportunity here. So Facebook is a little bit weaker, and the reaction on some of the other stocks has been more neutral.